Hello traders, today is May the 16th. My name is Devin Hornsey, markets and trading. Today we're looking at the week ahead. Okay, just a quick scroll through the week and see that Chinese data out this morning came in worse than expected. So retail sales year over year came in at minus 11.1%, way below expectations and the previous reading. So unfortunately, Chinese data is probably going to be dominating the sort of risk off, risk on sort of tone this morning. If we go to the YouTrading.com for its heat map, we can see currently the euro is the strongest currency. Chinese yuan is also mixed. New Zealand dollar, Australian dollar, and CAD are weakening. So the bottom left-hand corner is turning red, top right-hand corner is green. We're looking for a risk-off day today. So move into the yen. We just need the Swiss franc to sort of also see a bid as well. I am expecting to see equities come back down, and we'll have a look at those later, especially after last week's end, and maybe commodities too. So going back to the Forex economic calendar, so retail sales year over year came in worse than expected for China. We go to the active trader platform, we can see that the dollar this morning is lower. If we go to the dollar versus the Chinese renminbi, so the Chinese currency, as you can see here, we are seeing some RSI divergence to price. So, traders will be looking for a pullback in this particular currency pair. But the fact that we had really controlled sort of down move in the dollar as the People's Bank of China kind of manipulated the market, if you like, because the dollar index itself has been rising for a long time. So the fact that the Chinese yuan was essentially strengthening against the dollar, I just believe that this was People's Bank of China sort of manipulation. Then they've lost control of that because they haven't added any liquidity into the market really. They haven't added any stimulus. So we're just sort of seeing that the Chinese yuan is essentially depreciating as the sort of move, and they're looking for dollars everywhere around the world now because there's a shortage. Retail sales, exports, foreign direct investment into China, obviously a lot lower this year. They're looking for dollars. And if we were to get a close above the 61.8% retracement, if this market structure doesn't act as resistance, if we get back above there, then I think we maybe take out the double top around the 7.2. Looking at the dollar index at the moment, obviously on Thursday, big pop up even on sort of weakening data. We had a move into the 105, and I'm just looking now to see if the 104, 104.5 acts as support. We took out Friday's low. So, obviously lower high, lower low today, looking to see if there's now a bit of a pullback into this consolidation period. Otherwise, we're looking for support and then another push higher. Now, if I just put on a fib extension here, so we've got the low January 21 up to the high April 21, down to the low May 21. And if I look to the right, we can see that 3.618% extension, and the 105 is kind of where we stalled out on Friday. If we get support come in around 104.5, looking to see if we can then push up to 107.5, maybe even 108. So looking to see if this double top now acts as sort of resistance or whether it's support. If we get a close below it, obviously, if we get back below 103.5, then that's like a fake out, come back into the middle of the range. Otherwise, we're looking for a range extension. So we'll possibly see the lows here up to the high and then just double it. Big range, measured move up towards 120, 119, 120. So potentially, if there is a real dollar shortage, if interest rates keep going up and people just need more dollars to pay off their debts, then we could be looking for the dollar itself to go up to 120. We've got a US dollar Empire State Manufacturing Index looking to come in worse than previous reading. Expectations are for 15.3 on that index. And then we have the monetary policy report hearings for the pound. So we're expecting to see some volatility in the UK pound this morning. And then if we look through, there's going to be a lot of central bankers speaking over the next couple of days. So it starts obviously with the pound monetary policy report in front of the government then. And then Tuesday, we've got Australian monetary policy meeting minutes. So we're looking to see what they were saying about raising rates going forward. Down here, we've got 1 o'clock, we've got FOMC member Bullard, and you can see that Fed Chair Powell speaks, and then a Fed member Mester speaks late on Tuesday, on either side of the retail sales and core retail sales ahead of the US Open. So expecting to see US dollar volatility around retail sales, then for the market to go a lot quieter until Fed Chair Powell and Mester have finished speaking, and then we might get a move in the dollar. Then looking through, next time we get a dollar move might be Thursday, sort of just ahead of the US Open. Wednesday, it's all about the CAD. We've got inflation data for the CAD, and we also have UK inflation, but expectations are for 9.1%, a rise from 7%, but we could even get double digit. And then there is even talk now of a rate cut next year in the Bank of England, because obviously they're going to have to support the economy, especially if the UK just walks away from the current deal. I'd imagine the pound's going to continue to weaken, and then the Bank of England are going to have to sort of undo some of this monetary tightening that they've started. So yeah, Thursday comes back to US dollar. Unemployment claims obviously came in worse than expected last week. Existing home sales also expecting to come down as prices go higher, and the obviously interest rates on mortgages go higher. And then Friday, kind of a quiet end to the week, retail sales month over month for the UK, and then MPC member Pill speaking, not expecting much on Friday. So all of the sort of tricky stuff happens earlier on, luckily. So we might get a low or high in the market on Tuesday, and then possibly looking for reversal on Thursday. Obviously, whatever happens on Tuesday, looking for turnaround into Wednesday. I'm not really looking forward to Tuesday, so I probably won't trade on Tuesday. But if we go back to the actual charts, looking at the euro versus US dollar, now we broke out of that weekly candle Friday, made a new low. And then today we're kind of within that Thursday candle, still looking to see if we can get some resistance at the bottom of that weekly inside. So I'll just go to the weekly chart. So looking to see if we can get the 24th of April that week, looking to see if that now acts resistance around the 104.7, maybe 105, and then a big push down towards that major sort of swing low from 2016, 2017. So still looking for the euro versus US dollar to come lower, looking for it to sort of seek parity eventually. On a weekly chart, the pound is looking considerably weak still. So back here, December is when the Bank of England started raising rates. We're looking to see if we're going to take out this low from March 2020. So that's the pandemic low in the pound. Currently, if we make a new weekly low, that would be a continuation of this lower lows, lower highs on the week. So the yen started off strong this morning after that retail sales data from China. Looking to see now if we're going to see the dollar versus the yen go higher or lower. Currently within last week's range. Go down to the daily chart. We're even within the Thursday range still. So if the dollar versus the yen had come lower again, we would have taken that. We would say, right, we're continuing to the downside, looking for maybe a test of this 200-period moving average. Now I'm just thinking all the stops above Thursday's high, just waiting around 130 spot 2. We're looking to see if we can take those, trap those guys short. That would have taken the breakout of this market structure here. Then, got a relatively equal highs around 131.3. So looking to see if we can get back above Thursday's high and take out the liquidity above there. Inflation is going to stay high because we're still seeing relatively high energy prices, obviously above the 200-period moving average. So currently in an uptrend, making higher highs on the daily, making higher lows on the daily, looking to see if we sort of get back above previous swing highs here. Maybe this double top around 113. If so, maybe take the 115 and then test this swing high here up at 120. But at the moment, just sort of seeing sideways action essentially with a slight bullish sort of momentum, but in a larger uptrend. Gold, however, is making lower lows, currently holding around $1,800 an ounce. Looking to see if we can take out the liquidity here from this double low, 1781. Then we'll just keep pushing until we get, in my mind, below 1700 to find the liquidity back here, 1680 zone. Just waiting to see if we can get back below this level and then sort of see what the trend followers do then. S&P 500 had a big bullish Friday close. That was good for anybody that was trading this range. Looking to see if we can now sort of get back above Friday's high. We made a new high. I reckon this high from Thursday is key. If we can stay above that, then that's a decent support. And then we're looking for essentially higher highs or higher lows. So we're looking for that high from Thursday to hold, make a new high, higher low, and then just keep making moves towards taking out liquidity above double top. So take about there, and then again, take out this swing high here. that would get us out of this descending trend line, and then see if we can actually just keep pushing higher then. So I think this high from Thursday is key. If we can hold that, then that gives us some sort of support level to work with. And then we're just looking, or waiting for the trend to actually develop. But in my mind, descending channels generally break to the upside. So if this is the low, then I am expecting a sort of a move back towards 4,400 at least, and then hopefully get back above 4,700. Okay, this week's going to be a bit choppy at the start. So take care, maybe reduce your risk, widen your stops. And then hopefully come Wednesday, you'll be seeing a slightly cleaner markets and then some trends developing. All right, good luck, and I'll speak to you again tomorrow.